Hey, what's up guys, welcome to the stock market update. So first things first, let's go through the S&P 500. So you can see that the S&P 500 has basically, been consolidating for the last 8 days. So that is about 6 trading days here. And you'll notice with the MACD that it is slightly red, but this shows that there is not a lot of, significant selling pressure. It's just a lot of rotation in between the S&P 500 stocks. So that is a good sign here. And the other thing, that's good is that if you look at cyclicality of the stock market, typically July is when the stock market performs the best here. So, if all things goes well, if the economy doesn't crash, which, there's no reason for it to crash right now, a lot of the earnings for a lot of the stocks are going to come out in August. So for this July period, it's going to be either consolidation or people are going to continue to keep buying because that's what they've been doing for the entire year, right? This is also an election year. So if this continues to track, then we are going to have a very, very good July on our hands. But that is not 100%. Always keep a lookout on, any news that is happening in the stock market. So next up, we have the fear and greed index for the market here. You can see that we are still sitting in fear. A lot of the market hasn't moved yet, so this is a very, very good sign. It shows that we are just almost done consolidating right now. A lot of the stocks right now are green in the pre-market. You can see in the futures trading, yeah, a lot of the stocks are green except for Nasdaq. This just changed here, so we'll see what actually happens when the market opens. The next thing I'll look at is also some of the economic data here. Now, I'm not going to go too deep into it. You can pause it if you are interested, but there's one thing that really interests me. It's actually next week, which is going to be CPI, right? CPI is going to come out on Thursday next week here. It's been, I think it comes out every month here if I'm tracking that correctly, and yeah, it's going to come out next week, so time passes pretty fast. Yeah, so that is for next week here. So as of now, the economic data, not a lot of people have been looking at it, and I just want to give that one check here. So next thing, we got NVDA. So NVDA basically, once again, still consolidating here back to this consolidating range, but you can see that the stock price is moving down and then it's moving back up. Now, this is actually a pretty good sign for NVIDIA. If you look at, the stock price compared to the MACD, we have a divergence here. So there is a bullish divergence for NVIDIA. And, it should probably continue to go back up right now because there isn't a lot of bad news. But technicals are not 100%, it's down 2.57 pre-market. We might still see rotation in the semiconductor industry. You can see SMH here has the very similar pattern with S&P 500. Is just down for the last 8 days. Once again, just showing that the semiconductor industry sector stocks are still consolidating here. So I wouldn't worry too much. I think the market is just trying to price stuff in right now. And one thing I'm seeing the market do right now is that it's buying lower valued stocks. So something like an ON Semiconductor that is it's less overvalued than other chip sectors. And also their revenue growth has been pretty stable compared to the rest of the stocks. I have a dedicated video on that if you're interested. Okay. So next thing, we got Amazon here. So Amazon briefly broke out of 190. I saw some CNBC commentary by someone like Josh Brown saying that this is pretty good for Amazon. Now, I do hold Amazon here, but I think what we really need to see is their next earnings here. So the concern here with Amazon is that they are going to open up some discount stores from shipping from China. So they're trying to replicate TEMU business model, and we are not sure if they are doing that out of strength or out of weakness, because we could start to see their shopping revenue go down as we see that credit card business consumer debt increasing to up to $1 trillion right now. It's probably still increasing right now. I think most of the data is delayed here. So Amazon might be seeing some problems with their online store growth. So we're not sure if their new store is going to be coming out of weakness or out of strength. I don't think it really matters, but it really is interesting to see what happens if it's out of weakness. You know, if Amazon's going to start having problems with their online stores, that is also going to be a problem. But at the same time, if they are able to replicate what TEMU is doing, then Amazon is going to have another leg up. If not, we are going to need to see their AWS cloud growth, which once again, I don't see a reason why it's not going to grow, but you know, their numbers could start to surprise us. And you know, the stock price seems to suggest that it's all going to be, you know, good, but we'll see. So still holder of Amazon, still have 30 shares here. I did not really get a chance to add when it was down, but I'm still going to keep my shares, and I'm still pretty bullish on Amazon. Once again, investment in hardware will eventually move into investment in software, okay? So next up, we got Celsius here. I had a dedicated video, but I just want to go through that technical real quick here. 1 day technicals, MACD does look like it's just about to cross up. So you know, I'm not sure if we need like Nielsen data to come out and say that Celsius drinks are starting to sell or something like that. Either ways, technicals look good, and there have been some adjustments on price targets here. Not necessarily too worried. You know, if anything, I'm gonna be able to I'm gonna hold this stock for maybe more than 1 year if it ends up not being a trade here, because the energy drink sector is going to be worth a lot, because I think the energy drink sector should actually be compared to the tobacco industry that, you know, happened in the past, where everyone seemed to smoke, right? Right now it seems like everyone drinks energy drinks here, and you know, Celsius is targeting all the fads right now. You know, that could be a good thing, that could be a bad thing. I'm betting on it being a good thing, and maybe I'll go through my position and see what's happening there. So next up, we got Palantir here. So Palantir is down about 0.12% pre-market. That's not too much here. I kind of said that I don't really expect Palantir to break out here, but I think it actually started to break out after it hit this resistance level. Mainly, you know, I just thought them being at 20% revenue growth might not be, you know, worthy of a boost by Wallstreet, right? But I think right now, Wallstreet is actually expecting Palantir to grow even faster than that, because, you know, Wallstreet might be a little bit slow sometimes, but I don't think they're necessarily dumb. I think what Wallstreet right now is doing is that they're expecting Palantir to grow at more than 20% revenue, and that is good for the stock. But, you know, at the same time, Palantir really has to deliver here, and we'll see if they can do it. Once again, that government business is going to be very strong. We are seeing, you know, some of the competitors like Snowflake take a massive hit because they're not able to do this profitably, and they also at the same time do not have that government business. So Palantir, you know, might be a special Snowflake here, no pun intended, in the software space here. But, you know, CRM is also doing pretty well, so it could also be tracking, you know, that software investment starting to go back up, because we saw software take a very huge hit since March, right? And right now, oh, by the way, Palantir did not suffer the same thing because of their government business. But right now we are seeing, you know, investment move back into software again. You can see the move in Snowflake here. Sorry, Salesforce here. It is up about 21% since the bottom. So you know, we might start to see software move back, and if software moves back, Palantir is able to increase their revenue growth, then this shit will probably be worth, I think, at least $31. I know some of that price target is going to be for 12 months later, but if they manage to grow in, you know, in their revenue just by a little bit, and when the stock market is, you know, trying to fully invest, right? We talk about the July cyclicality in the stock market, then Palantir might very well be worth $31. Now, will Palantir be overvalued at that point? I think they will be, but once again, Palantir is going to be overvalued for a good reason. They have always sort of been a little bit overvalued. I don't think we have seen the stock undervalued at all. So, you know, you should be pretty used to that. And as long as they still have very strong government sector, and they are able to keep that, you know, quote unquote ontology mode there, then we'll see more investment pile up into Palantir. But it has to stop at a certain limit. Okay, I don't expect this to grow to $100 in the next 4 months or something. So next up, let's look at Tesla here. So Tesla, a little bit of a weird investment here because a lot of people are talking, about robo-taxis and the bots here. And not a lot of stuff is said about the cars, where they get most of the revenue. And yeah, I know as soon as I say that, a lot of Tesla bulls will say that I don't know the company, but okay. Let's look at the revenue sources here. By the way, there is also energy. I do know that energy is a very important sector, and it's actually growing a lot here. It grew 100% in 1 year in 2023. This is delayed data. We don't have 2024 numbers out just yet, but you can see that Tesla only has revenue from two sources here: automotive and energy. And for that automotive sector, I think a lot of people are still very, very concerned about it. Elon Musk is back, yes, but we're not sure if the cars are still gonna be sold at the same level as it was, I would assume, in 2020 and 2022, around this level, right, when the stock was very, very, very high. One thing I want to take note of is that we are seeing other car companies invest in EVs. So, Volkswagen invested in Rivian, and this kind of shows that there is still more room for the EV sector to grow, for the EV car sector to go. It just might not be a very good time right now for EV sector, but because I think Volkswagen invested into Rivian, that sort of brought in some investor confidence into something like Tesla, right? Because it might not be working very well right now, but a giant like Volkswagen investing into Rivian is gonna bring in a lot of interest back into the battery EV market, and we'll see how that affects Tesla. Now, if I were to pick between Rivian and Tesla, yes, Rivian has a lot more potential, but they also have a lot more potential to fail. And as for Tesla, it's already well established here, and they still have the scale, right? Just because they're not selling as many cars, does not mean that they are scaled back. No, they still have the scale here, and they're gonna be able to produce cars profitably. So I would choose Tesla out of Rivian, but I think the EV space is in a very interesting space right now, no pun intended. So we'll see what happens. Now, I also have another sort of stock that is related to the electric vehicle sector, and that is ON Semiconductor. Now, I feel like I've been trying to pump this stock a little bit. I don't really mean that. I talked to some people about this semiconductor stock. It's a value play in my opinion. The bad thesis here is that battery EV vehicles might not be able to sell, and that's why people are bearish on ON Semiconductor. And once again, Volkswagen is investing in EVs, so we'll see how that works out. Whether Volkswagen is wrong or whether a lot of people are wrong. So I'm not sure. Once again, with the stock market, you will never know until it actually happens. So here is my portfolio, and it's not that big of a portfolio. Once again, I don't really try to brag about my portfolio. It's just a very small one. The thing is, I like to look at my positions to sort of get a gauge on whether I am confident in my positions. And so far, I think from my actions, I'm pretty confident, except for when I sold Snowflake at a very bad price. Yeah, Snowflake's at about 130 or 133 if I recall here. So the best performing position here is going to be Palantir. Talk about Palantir in this video. It's going to be pretty exciting for Wallstreet to start a price in the higher growth rates, but at the same time, as to whether it is overvalued or not, we'll see. They've never been undervalued before. HIMS had that GLP-1 scare last week here. Seems to have not really affected the stock in the long run. Now, I know there is a short dip here, but I think that dip ends up being a little bit more of a healthy dip than sort of a unhealthy dip. Robinhood, as the market is going to move up in July, well, that is the trend here. It might break, but if the market continues to move up and Bitcoin continues to recover, which it's on its way to recover as well, then Robinhood is probably gonna continue to grow. Amazon, I explained how they are starting up that new discount store in China, and also their AWS revenue is probably gonna grow. Tesla, just explained that electric vehicle sector, CRM software, iBit is actually my sort of Bitcoin play. Lululemon didn't really go through this stock, but I am still holding a very, very small position. I still think, even though Nike is having some troubles right now, that Lululemon is still a value stock in their own sector, which is their clothing sector. ON Semiconductors is going to be tied to that EV sector as well as robotics actually. And then for Celsius, I still think it's going to do what Monster did, and I still think it's going to do pretty good. But we might start to see Celsius consolidate around this area here. So that's it for my portfolio and today's stock market update. Thank you guys for watching. Like, subscribe, and see you in the next one.